Hi everyone, welcome to a Monday Rapid Fire. Hope you all had an amazing weekend. Let's crack straight in. I think something that is really consequential to this market in the short to mid-term is no surprise, is the US election. There are a bunch of other macro things going on at the moment, but I do think this market is going to surge or pull back based on some polling data and how likely it is Trump is going to get into office. Now, why I say that, if you've been living under a rock, Trump has a very clear crypto policy, and a Bitcoin strategic reserve is the most bullish thing you could probably ever think of leading into a US presidential election. Right now, Kamala Harris essentially has no policies currently, bit of a blank slate in terms of her crypto outreach and how they're going to approach that under her administration. What we can look at, though, is a benchmark of what we're currently seeing, which is the Biden administration. She's the vice president for that. So at a minimum, I think we're going to see the exact same approach under her administration if we do not hear anything else about this leading up to the election night. So that's my base case. So currently, there's a pretty hostile approach to the space. However, we have seen the first Bitcoin ETF be approved. We've also seen the first Ethereum ETF be approved. So it's very clear that even if you are hostile towards this space, it's not going anywhere. In fact, it just eats away and just grows and grows and grows. So ultimately, it won't matter who gets in. However, one side, as from an investor standpoint, is more preferred in who we want to see in there from that investment perspective. Because if Trump wins and we see that the polling starts to improve in his favor, I think the market surges again. But currently, with Kamala gaining in the polls, and we're seeing a ton of polls coming out showing that she's starting to firm in a lot of these swing states, which is so important for where we're sitting, the market has kind of fallen back into a bit of a sideways chop malaise. Again, I'm not saying that's the core reason the market is maybe not following through above 60,000. However, I think if Trump was firmly back at that 70% support or whatnot at the prediction markets, we'd be seeing more of a positive drive and price higher. So just wanted to put that on your radar. We've just got a new poll coming out. Again, I think polls, you really need to take them as a grain of salt. You really want to put polls together and kind of find an aggregation of overall multiple numbers over multiple polls. And we're seeing Kamala have a massive surge recently, which is fantastic for her. I'm still not convinced it is a very successful honeymoon period. We have the DNC coming up in about a week, which is the Democratic National Convention. We're going to hear a lot more about policies and where things sit at that point. We also have debates likely coming up in the next month or so. So we're going to see a lot more about this. Still lots of twists and turns. Again, we did see a new poll come out today, which I think is more accurate based on what we've seen before the last couple of weeks, which was Trump in neck and neck and in front in a lot of these battleground states, which are leaning more towards the red. Some polls I've been seeing lately, heavily red states are even flipping to Kamala. Something smells a bit fishy there. Also, a lot more people are in favor of Kamala now in terms of the economy. Again, under Bidenomics, high inflation, a lot of turmoil where Trump had a very strong economy under him. I'm just not seeing those polls as very accurate right now. That's just my interpretation. Doesn't mean it's true or not. We're having a look here. Trump is leading by 2 in Pennsylvania, Nevada by 3, North Carolina 4, and Arizona 1. They're not very big leads, and they're within the margin of error. And I would strongly urge you to check out more strategically around the Electoral College and how the votes work. But I've seen a lot of prediction analysis done on this election. And if everything holds true right now, if Kamala loses Pennsylvania, she has about a 3 to 4% of winning the election, just in terms of how the electoral map is looking. But if Trump loses Pennsylvania, then Kamala's likely going to win. It is such a crucial state, barring any random state flips leading up to it. So that's my broad take. Probably spent longer on this than I really wanted to. I might just quickly look at Polymarket, which is a crypto-based platform, and it has gained so much popularity in this election cycle because it is 24/7. It's highly liquid versus PredictIt and a few others that are being looked at a lot. They're very illiquid. It operates in business hours, slow to get money moving left and right. So this seems a pretty good gauge in my view. And Trump was about 70%, Kamala was about 40%. Now we're seeing Kamala inch in front. And I think that's reflective of the polls. It's reflective of a lot of the mood out there, and Trump making a lot of unforced errors of late. So this is going to be very fascinating to watch, but I think this is fairly accurate, but I think it's more neck and neck. And again, it's just probabilities that they're going to win. it doesn't give, I guess, one side a guarantee either way or the other. But yeah, wanted to show you this because it's something we have to pay attention to in terms of the shorter term, mid-term drive of the market. I think, again, if Trump gets more in front again, we see the market feel a lot warmer to the upside, which I think is going to happen anyway towards the back end of the year in the election. But anyway, let's move on to on-chain. The MVRV, it's a really good on-chain metric to show you when Bitcoin is overvalued or undervalued. And right now, I'm seeing that Bitcoin is in a very similar state than where we were back here in 2019 before the bull market move. Right now, just consolidating, hugging that band. Also, same on the oscillator as well. We're coming back to that same region, that main area. So I'm really liking what I'm seeing in terms of consolidation, building for that next big move. Really like that. Mayer multiple, this essentially shows you the standard deviations from the 200-day moving average. And I love this because it's kind of an on-chain mixed with a technical chart. And right now we're hugging, I guess, we're essentially on, the 200-day moving average. So the blue line there, 0.08, standard deviations from that 200-day moving average. We haven't seen any green dots yet. We did through here, but if we were after post-halving 2020, we really didn't see any touches again. So this to me looks like she's building, down at this level, reloading, looks really, really fantastic. Stablecoin supply ratio is another one you can dive into as well. But I think this is great in showing you that stablecoins are locked and ready to go. There's a lot of powder there, there's a lot of fuel. If the market gives the signal, she's ready to go. We also have to factor in that we have a lot of Bitcoin ETFs and Ethereum ETFs firing, just say in a walled garden without a lot of the stablecoin data coming into it. So I'm not sure how that affects it, but I would assume that there's a bit of a disconnect and a growing maturation of the market, moving away from USDT dominance and Bitcoin dominance. There's some skewed data in there, I feel, with these ETFs. We're getting a lot of inflows that I don't know if are accounted in a lot of these traditional charts that we're looking at, but we will pay attention to. Just on the ETFs as well, I like the inflows that are coming in. There was no mass panic from the boomers and all these funds that acquired Bitcoin. In fact, they're adding, there's been minimal outflows, which is great. Just sort of treading water, but I do expect these to start really hammering away as we get towards the election cycle. So yeah, the stablecoin supply ratio, we're in that underheated, yeah, that's right, underheated territory. I just lost my mind there. Versus overheated, we're at the top of the Bollinger Band. So when we see those red dots, it's a pretty good time to think that there's a lot of deployment of stable coins and not really much in reserve. And when we're down into that blue area, like I said, guys, you can see that kind of flip. What I'm watching here, and I'll start with a more macro chart than I will with Bitcoin just yet, but I'm watching gold. Gold looks like she wants to break out to a new all-time high, and I expect Bitcoin to follow it in some way or another. Whether it be punch back above 60,000 or, follow through with its low and then start to move higher back into the range. But gold here, it's sniffing out trouble in the world, and I think Bitcoin will do the same. And as this market matures, I think Bitcoin becomes more of that risk on asset. Risk off, if I got them confused. When there's trouble and risk in the environment, I think Bitcoin will capture that market versus being so reactionary to equities movements here and there. So gold, definitely one I'm watching. Let's scoot on over to Bitcoin because I didn't really like the weekly close. It's not the end of the world by any means, but the weekly close for mine didn't get above that 60,000 and that 62,400 mark. That's okay. I'm expecting some chop around here, but there is scope for us to sort of feel out this wick a little bit down to the bottom of this wedge. If I'm zooming out though, I'm thinking that this is just one heck of a giant cup and handle with a pullback, and this is a bull flag emerging. That's kind of my bias here. I'm expecting up and to the right at some point. We're also seeing the start of a bull divergence emerging here. It hasn't confirmed or anything like that. I think for a confirmation, we can make that higher high, but there's every sense to think here that this is the makings of a reload and then a push back into the power zone much higher. You see there, higher low on the RSI. Meanwhile, price made that lower low, which is a pretty good signal. But right now, again, the market feels very muted. It's kind of waiting for something, and I'm not sure what that is, whether it be the DNC, whether it be something in the macro, or we're just waiting for additional flows. It's fine. I wouldn't get too concerned with the overall Bitcoin market, unless we started to see significant weakness through that $54,000 level. If that's the case, then I would expect us to come down to the bottom of this trend line of 52 and maybe another low at about 46,000, and that would be the final low. So I do expect though there'd be a lot of support beneath us down to that 50,000 region based on those volume flows that we got through in that cluster that came through when we broke through that 50,000. So pretty confident with where we sit, but it's just going to, again, try and, shake people out right before the good times. And that's what sideways capitulation does. Now, Ethereum here, it does look like she wants to come back down to that 2450 level. Try and create a more defined daily higher low. That's fine. RSI all looks bottomed out. So yeah, I'm not really too concerned with any of these charts. They all look ready to move when the market wants to. And I like to say to the masterminds, and just generally when I've been in this market for multiple years, multiple cycles, just my spidey senses go off. When Bitcoin and the market gets boring and everyone has apathy, it is when you need to pay the most attention, because she's about to make a big move. And we've already had a big move to the downside. So I'm just not, and 50,000 held so far. I'm not expecting, another move. I think that's a low priority. It's not off the table, but it's a lower priority for myself. Something I'm watching as well, guys, is Solana strength. Against Ethereum, it looks like it's broken out. It's come back, retested the lid. We'll see how this goes. If this starts, moving higher and sort of engulfing these candles, then she's off against ETH. Again, just broadly, I'd be looking to have a minimal risk approach just currently until we get a few more conclusive daily closes and weekly closes above 60,000. But right now, not too concerned. I'd be having alerts at the lower bound range, 55, 54,000 reevaluating, and 60,000 to the upside. Again, you shouldn't be day trading this kind of chop. It will tear your hair off, tear your face off, and it's just not fun and it's emotionally exhausting. I would just highly recommend trying to tune out the short-term noise, think where the market's going, position your portfolio accordingly with a lower risk slant. And if you want to capture the high risk, because prices are fantastic at the moment, you can just inch your toes a few percentage points into these and build positions. You never should go all in on anything at any given time. So yeah, just have that practical approach, which helps you manage your risk and your emotional situation as well. So guys, hope you have a wonderful day. Any questions or comments, leave them below, and if I see them, I'll try and get to them. So have a wonderful day. See ya. Bye.